Welcome to our channel. Today we how to configure solo 401k using Guideline for tax strategy, detailed guide step by step clearly. To configure a solo 401k using Guideline for tax strategy, start by visiting the Guideline website. Create an account by providing your email and setting a strong password. Once logged in, navigate to the retirement plans section on the homepage. Select solo 401k from the list of available retirement plans. Read through the details and benefits of a solo 401k to ensure it fits your financial needs. Click on the Get Started button to begin the setup process. Fill out the initial information request, including your business name and type. Provide your employer identification number, or EIN, if you have one. If you do not have an EIN, you can apply for one directly through the IRS website. Next, specify if you want to make contributions as both an employer and employee. Proceed to enter your estimated annual income to help calculate your contribution limits. Guideline will guide you through determining your maximum contribution for the year. After calculating your contribution, fill in your desired percentage for employee deferrals. Make sure to review the tax implications of your contributions. Next, choose an investment strategy based on your risk tolerance and retirement goals. Guideline offers several investment options, including stocks and bonds. Select your preferred investment mix for your solo 401k account. Once your selections are made, agree to the terms and conditions and privacy policy. Submit your application and rest assured that Guideline will handle the necessary paperwork. Shortly after submission, you will receive confirmation of your solo 401k setup. Log into your account to review and finalize your plan settings. Once everything is confirmed, start making contributions to maximize your tax benefits. Regularly monitor your investment performance through the Guideline platform. Consider consulting a tax advisor to ensure you are optimizing your tax strategy. Keep track of your contributions to stay within the IRS limits for the year. Adjust your contributions as needed throughout the year to reflect any changes in income. This will help ensure you maximize your retirement savings while minimizing your tax burden. If the page does not load, refresh the browser or try again in a private or incognito window. Don't forget to like this video and subscribe to our channel for more step-by-step tech guides.